The 72-hour rule. What to do before the economy freezes. The market doesn't warn you, it doesn't send a message, it doesn't ask if you're ready, it just stops. One morning you wake up, your salary hasn't come, your banking app is slow, transactions are pending. By evening, withdrawals are limited, payments are delayed. And suddenly you realize something dangerous. You don't have time. Because when an economic freeze begins, you don't get months, you don't get weeks, you get hours. This is the 72-hour window. The small gap between everything is normal and nothing is working. And what you do in those 72 hours decides everything. Whether you stay stable or collapse with the system, most people fail here. Not because they're poor, but because they're unprepared. They assume the system will hold, but systems break. And when they do, speed matters more than intelligence. So let me walk you through this. Survival. Hour 0. Nothing looks serious yet. News is uncertain, markets are volatile, people are confused. This is where most people ignore the signs. That's the first mistake. Because early signals always look harmless. But this is your only advantage. Time. So you act. Not emotionally, strategically. The first thing you check is liquidity, not how much money you have, but how much you can access. During a freeze, access is everything. Your balance can show a large number. But if you can't withdraw it, it's useless. So you move, you transfer, you withdraw, you create buffers. Because once restrictions start, movement becomes impossible. Now comes hour 12. The system starts tightening. Banks reduce limits, payment delays increase. People start noticing. This is where fear begins. And fear creates bad decisions. People rush, they panic, they follow rumors. That's the second mistake. Because panic destroys strategy. So instead of reacting, you prepare your structure. You secure basic needs, food, fuel, essentials. Not extreme stockpiling, just controlled preparation. Because during disruption, supply chains slow down. Prices rise quickly. Availability drops. The person who prepares early pays less. Now hour 24. This is where things become real. Markets are unstable. Headlines are louder. Companies start responding. Hiring freezes, cost cuts, and quietly, layoffs begin. This is the external shock. Income uncertainty. And this is where internal weakness shows. If you depend on one income source, your risk is maximum. So you shift focus. You activate alternative income, even if it's small. Freelance work, online services, quick monetizable skills. During crisis, cash flow matters more than growth. Now hour 36. The system slows further. Transactions fail. Withdrawals take time. Confidence drops. This is where people freeze. They stop acting. They wait for clarity. But clarity comes late. And late action is expensive. So you move before certainty. You reduce exposure. Unnecessary subscriptions. Risky positions. Unplanned expenses. You cut weight. Because flexibility increases survival. Now hour 48. This is the pressure point. The system isn't fully broken, but it's unstable. And this is where consequences begin. Debt becomes dangerous. EMIs continue. Interest continues. Penalties continue. Even if your access doesn't. This is how debt traps tighten. So you prioritize. Minimum payments. Essential obligations. You protect your financial identity. Because your credit is your future leverage. Now hour 60. Most people are now reacting. Too late. They try to withdraw. They try to adjust. But options are limited. This is where preparation shows. If you acted early, you are calm. If you delayed, you are trapped. Now hour 72. The system freezes. Not completely, but enough to disrupt normal life. Transactions slow. Confidence breaks. And now you see the real divide. Prepared versus unprepared. A crisis doesn't destroy everyone. It redistributes control, from reactive people to prepared people. So what actually matters in these 72 hours? Not predictions, not luck, structure, liquidity, access. Because money you can't access is not money. Now let's go deeper. There are two types of mistakes people make. External mistakes, bad investments, high debt, no savings. And internal mistakes, fear, delay, denial. External mistakes hurt, but internal mistakes destroy, because they stop action, and in crisis, inaction is loss. Understand the math. If you lose 30% of your capital, you need over 40% to recover. If you lose 50%, you need 100%. Recovery is always harder than protection, so your goal is simple. Don't lose, because survival is the first step to growth. Now let's shift perspective. Most people think wealth is about accumulation, but in crisis, wealth is about control. Control over cash, control over decisions, control over time, and control comes from preparation. So what should your system look like? Not complicated, just layered, accessible funds, multiple income paths, controlled expenses. That's it. Simple, but powerful. Because complexity fails under pressure. Simplicity survives. Think about your current situation. If your income stops for 30 days, what happens? If your bank access slows, what happens? If prices jump suddenly, what happens? Your answers show your vulnerability. And awareness is the first step to strength. Now here's the uncomfortable truth. You don't rise during crisis, you fall to your level of preparation. If you prepare early, you stay stable. If you ignore signals, you struggle. Because crisis doesn't create weakness, it reveals it. And this is where most people fail. They wait for confirmation. They want proof. But by the time proof arrives, opportunity is gone. So you act before certainty, not blindly, but logically. Because risk managed early is opportunity later. Imagine this. Everyone is forced to sell. Assets drop. Prices fall. But you have liquidity. You have stability. Now you don't panic. You choose. And choice is power. That's how wealth is built in crisis. So remember this. The 72-hour rule is not about fear. It's about readiness. Because the system won't slow down for you. It will move. And you either move before it or you get carried by it. The next disruption won't announce itself loudly. It will start quietly. A delay, a restriction, a small signal. And those who recognize it early will survive it. Those who ignore it will learn the hard way. So prepare now, not when it starts. Because when it starts, it's already late. Your financial future is not decided in years. It's decided in moments, and sometimes in just 72 hours. Be ready. If this video helped you, like and subscribe. Share your thoughts in the comments. Your feedback helps improve future content.